Hey traders, Mike Katz with 7 Points Capital. And back on Monday, the market here had gapped up in the morning, and we had the talks of maybe a potential deal with China, and the market liked it. And this was the second day in a row where we gapped up. And the same thing happened on Friday. We gapped up and sold off, and then we did get a pretty good bounce, whereas today there was a lot of follow through. And to be honest, as the market was selling off, we were kind of looking for headlines to kind of tell us why that might be going on. And aside from McConnell talking about the Senate vote with regards to Trump's plan, I think we didn't see a whole lot. But that's the beauty of trading price action, where we don't have to see why prices are moving. We basically just are interested in the fact that the prices are moving, right? So I got into SPY like I do most days, and I feel my way around and see if there's any levels I can trade against. And looking at my SPY chart here, right there. So I'm getting in and I'm versing this 90 area because that's where we're kind of put in a range, and I'm trying to see if I can jump on board and move, and then potentially a big trade happens, right? More often than not, you don't get one of those big trades, but today was pretty nice, and we got one of those big moves. And let me see if I can just zoom in a little bit here. There we go. So we got this, basically this type of action where we had lower high, lower low, and I think I covered here a piece, like a third, and I backed off. I didn't want to put it back on yet because it was going to be a bounce too close to my stop. And then if we look at my executions, I didn't put it back on here on this bounce, but then when he sold off again and made a lower low, at which point I said, I probably should have put it back on. So I'm looking for spots to get bigger size. And then that's where I did. I had a bounce here. On a bounce, I got in, still risking off of here. So I'm back to full position here. And then I cover a third here, thinking I'll get a bounce. And this was a spot where I didn't get a bounce. So most days what I end up doing is I'm just trading around a core for a piece of my position, either a third or a half. And I'm trying to make some cash flow. And the days where we do get a big move, chances are I can't put my position back on, the one that I'm trading around a core. So that's kind of what happened here. I had a third that I'm trading around a core, and then I couldn't get a bounce to reshort that. And then it just started going lower. And then it just went lower and lower to the point where I just didn't want to chase it anymore. But I still had 2/3. So a few traders gave me the question of how do you stay in? How are you able to stay in such a nice big trend and not be tempted to take the winner and not cut it off earlier when it looks like you get in a bounce and so on and so forth. So the way I like to do it is, let's see if I get my annotation tool out. Just keep it simple. There it is, draw. So when I get in, my stop is right there, right? And then when we're making a lower low, my stop is right there. Let me undo that one because the lower low only kicks in when we break here below this level here. That's when my stop becomes that level. So until then, we were here. And then once we break below, right, so that's the stop. Once we break below this level here, right at this area, all of a sudden my stop becomes here. So reason being is I need to see this level get breached before I consider this a significant pivot. And that's where I'll trail my stop to. So once we get below this pivotal low, then and only then can I move my stop to this recent high. Otherwise, this thing can chop around and do this, and I can move my stop. It'll take me out and then reverse back down. And I don't know that this move up is over. So the thinking is we're potentially in a downtrend, right? That's what I'm betting on. So we have this downtrend, and the retracement to that downtrend should be a fraction of this move. Well, I don't know when this retracement is over. The only time I know that's over is when we breach this low here. So once we come down and we breach this low, then I know that this bounce from here to here, this correction, this retracement to this move is over. So once we breach below the low, then I can trail my stop to here. So we head lower. My stop the whole time is above there, is right there. Once we break this significant low, then that's when the stop gets to be there. And we keep doing that, and we keep on finding these significant spots. Whenever this low gets breached right here, that's when my stop goes here. Make sense? And that's why I can withstand this type of a move and come back down. So I covered another third here, and then the rest I just got stopped out here on this pivot, right? And then I try to add a little bit here. It looked like we were going to break down, and then the whole stop basically was here. And that's it. That was that. I think I tried it one more time here when it looked like it might be curling back down below this level, and then I got stopped out here. So I think I was basically, well, I don't know if you want to call it 1 for 2 or 1 for 3, but you don't have to have a high win rate to win as long as you can catch a trend and stay with the trend. What I see too many people oftentimes do is, you know, they'll get in and they'll cover some here, and they'll cover some here, and they'll cover some here, and cover some here, and they've got, you know, they've got a really high win rate. But when you do get this type of a move, which is not often, when you do get this type of a move, you're not going to have any real size on. So I tend to just force myself to do whatever trading around a core, whatever scalping I want to do. I'll do that with a small position, either a third or a half, and then I want to keep a position on in case I get a big move. So those of you who were asking me on Twitter and some of the traders in the firm about how to stay in longer trends, that's kind of my thinking. All right, so I don't know if we get some more action, some more follow through the next couple of days. I have no idea. I think it's tough to say, and the market will just do what the market wants to do. I just need an exit strategy that's going to allow me to participate when I'm right, and potentially, hopefully, capture a piece of the trend. The other name that I was in was CIFS, and this one I actually went long and then short. The reason I was long this one and in the morning instead of short is, if we look here, let's look at a bigger time frame. This was a runner, I think it was last week or the week before, ran really well to 350. It trapped a lot of people on this day because this is a pretty toxic name, and then started fading off in, you know, the next day. But it based pretty well, held it around $2, and then it started going again. And then Friday it went into this resistance here from 350 from the other day, and then we cleared that. So once we're above that, this tells me that there's strength, and I probably don't want to be shorting these, at least not on the open when this thing can really take off. So I don't know. I decided to go long. It looked like there was, you know, a healthy trend. The problem with these low floats, these trashy names that, you know, technically they might look good, they might look like a healthy trend, but a lot of times you get these kill candles, you get these big washes, and you know, you never know what you're going to get with this. So I'm never going to trade this too big. But the more these low floats run, sometimes I will participate on the long side. And that's kind of what we had here today. I bought this dip here to where we broke out from versus here, sold into a pop. But you'll see the way I trade these is I have much less patience on the long side in these low floats than I do on the short side. So when I'm getting in here, you know, I'm getting out and out instead of keeping a piece. Most of the time on the long side, what I'll do is I will just get out of the whole thing when I don't like it anymore. And then I got back in here and then just felt like it couldn't break out and make new highs, at which point I said, all right, let me get out. And then we had a kill candle, got short, cover some, and now short. And then I really felt like this thing could unwind. So I waited till the close, and then I just, scaled out of it on the close. Looks like there's some downside movement after the bell. We'll see what tomorrow brings. But I'm noticing that a lot of these names that we're getting this type of action where you don't see a whole lot of follow through. Example, RKDA, example, BPTH. You're seeing, that the longs are in control. They should be moving the stock up quite a bit, but they're, you're not seeing the follow through for a day or two, or even intraday, this really strong trend to the upside. At the same time, if it's something that gaps up, and if it doesn't fade early on in the first half hour, you're probably not going to get a persistent fade the rest of the day. A lot of times you get this chop both ways. So I don't know. Plan right now is just to, on an intraday, low float, just kind of trade more and take what it gives me and be more opportunistic. And that's it. What else? A couple of trades in swing. I'm not going to even go over that. Not enough time. That's it. Thanks for watching. Give us a thumbs up, subscribe, and Mike Katz with 7 Points Capital.